Hello, everybody. So today we're going to be talking about navigating the regulatory landscape of buy now, pay later state of the consumer. My name is Bryce Deeney. I'm co-founder and CEO of Equipify. And with me today is Doug Preston. Doug, why don't you go ahead and introduce yourself as well?
Yeah, happy to be here, Bryce. Really interesting times, exciting. Happy to be part of the team. Just joined a few weeks back, and really looking forward to jumping in here and being impactful.
What we're talking about today is the CFPB released a report on their buy now, pay later exploratory research. And when you look at the CFPB's point of view, what are some of the concerns that they had specifically to buy now, pay later usage for consumers? And then, from a financial institution perspective, what does this actually mean for you? How does this impact your customers, your members? And how should you be looking at this? And how should you also be looking at regulatory impacts and structuring your products in a way that is in line with what the CFPB is calling out here?
Yeah, that's right, Bryce. As we jump into the CFPB report, it's important to note that as many sit on the edge of their seat looking at CFPB as potentially a foe, Equipify looks at the CFPB as consumer protections that are well needed, and we are embracing that in a way that the products that we're bringing to market are to the benefit of the consumer in a way that the CFPB should look at us as a friend.
Yeah, and I thought it was also very interesting. The CFPB specifically calls out that they're looking at Klarna, Affirm, Afterpay, and PayPal. They're looking at their pay in four products and the regulatory concerns on those products. What they specifically say is not being included in this report and the recommendations are point of sale and post-purchase card installment plans. Yeah, it's a really important distinction to be made here that although many products claim to be buy now, pay later, the most popular form has been driving adoption comes from third-party providers, from non-regulated financial institutions. These providers offer a solution that's tech forward and amplifies and simplifies the loan origination process. So consumers have flexibility when it's needed. Because of their ability to facilitate buy now part of BNPL so well, there is a ton of uptake, right? There's a lot of demand and a lot of originating happening. However, where there is friction and where the CFPB really has its eyes on is the pay later part of the equation. But we believe that's where consumer financial health and protection comes into play. And the CFPB does specifically call some of these items out within the report. So I do want to kind of transition us a little bit into some of the meat and potatoes within the report. So why now? Buy now, pay later grew from 2 billion in volume to 24 billion in volume in a 2-year period. And I know that this is not the first time we've seen growth rate and adoption of payment technology come in this fast. I think you were around just like I was in the payment space when the P2P money movement of like 2014, 2016 timeframe just exploded on the scene, right? Everybody had a smartphone in their wallet now, and you could just download an app and transfer money. That was transformational, and it exploded overnight. So I think that there are some really good examples out there of technology like buy now, pay later, or just money movement in general, how consumers interact with their money. We've seen examples time and time again of where it starts with some direct fintech. They kind of transform the digitization of consumer behavior, and then financial institutions do it a little bit more responsibly after the fact.
Yeah, and to be clear, we're not saying that this is nefariously being done, right? At the end of the day, there's a difference in the business models between the merchant side of the house and sort of the post-purchase banking side, right? Fintech business models today are built upon acquiring and driving profits, and it makes sense to go to market with a BNPL solution that focuses on optimizing, BNPL. The gaps that we're drawing from a regulatory perspective is more of a byproduct of the fintech business model, right? Um, at Equipify, we think a more consumer-friendly BNPL solution is best offered by the financial institution who's looking out for the credit worthiness of the individual consumer.
Yeah, absolutely. So just to be clear, from the Equipify standpoint, we believe regulation is good. It's needed and it's overdue. So for those of you who didn't get a chance to read the 80-page document, we did it for you. Feel free to read it as well. There's actually a lot of really good items within this report, but we're going to take a look at what key areas of concern the CFPB has. The first is discrete consumer harms. This includes lack of standardized disclosures and challenges in dispute resolutions, all of which are coupled with the compulsory use of autopay. So to give you layman's terms, basically it means from the consumer perspective, it makes it very easy to get, but hard to get out. The second component is data harvesting. Essentially, what will these third-party fintechs do with my data? And the third is overextension, right? Or you can also call this stacking, but essentially it's the inability for the marketplace today to prevent consumers to stack their loans or borrow more than they actually should borrow for their financial health and goals. So I think what we're going to do is dive into these a little bit, but Doug, I'd love to hear your thoughts.
Yeah, I mean, they're pointing out three obvious areas of interest. Fintech is not looking at a BNPL transaction as a typical loan. Therefore, they're not issuing the standardized loan terms and clear disclosures that a consumer might be used to from their bank, right? So these are important notations because at the end of the day, consumers need to understand what they're getting themselves into clearly. And without clear disclosures and understanding of repayment responsibility, could get them into sort of a financial pickle, right?
I couldn't have said it better myself, Doug. For financial institutions that are concerned about how their cardholders are being impacted by these third-party buy now, pay later companies, adding accountability is really good news. Really, if you think about it at its very simplicity, consumers prior to buy now, pay later essentially used a card product issued by a financial institution. So yes, could I go out and create 5, 6, 7, 8 credit cards from multiple different financial institutions and kind of stack my loans that way? Yes, I could. But there's things like bureaus that help navigate that, or at least create a record of that. That way that ninth borrower or that ninth lender I go to maybe won't give me a card. Right. So there is this layer of protection built out for financial institutions from a risk perspective, as well as for consumers, making sure they don't overborrow. And that's one of the areas that we do see this unknown right now, where I can go get loans from PayPal and Affirm and Klarna and Afterpay. And at least up until very recently, none of them knew I was borrowing from the others. And additionally, if I go to my financial institution, I say, hey, I want to borrow $500 on a personal loan, or I want to borrow money on a credit card. Do they have visibility into these third-party buy now, pay later loans and installment plans that I have set up? So the CFPB specifically calls this out and says, hey, we know that the bureaus and financial institutions and the regulators were all working together, and technology providers, we're all working together to normalize and standardize this process, not only for the health of the consumer, but actually, if you think about it, for also the health of the financial institution, the lenders who are taking on the risk of lending out money to consumers.
Yeah, listen, Bryce. Again, I go back to the Klarnas and the fintechs and the Affirms of the world. They haven't, at least to today, as you mentioned, really spoken well with each other, and the CFP is concerned about that because that could lead to sort of like overextension, right? And putting consumers again in that position where they weren't potentially thinking that BNPL will be harmful, and it may and consequentially be that to the consumer. So this goes back to what the CFPB is looking to do, really bring transparency to BNPL.
That's a great point, Doug. And one thing we already know is 70% of buy now, pay later users would prefer this from their primary financial institution. If you can bring BNPL to your consumers on their existing debit cards, it makes it accessible through their digital banking app. And that does make a real difference. It provides a more seamless experience. So we're going to talk about the second concern the CFPB brought up, which is data harvesting. I do want to point out for data harvesting, the CFPB touched about the concerns on consumer privacy and autonomy, specifically what data is harvested and how it's used. I often get asked this question rhetorically during my chats with financial institutions, which is, when's the last time you sold your consumer data for profit? To date, no financial institution that's regulated has raised their hand and says we sell consumer data. As financial institutions, the guardrails of consumer privacy and data protection isn't just how you operate, but it's also the foundation of what your consumers expect. If I go create a checking account and borrow money from my primary financial institution, especially if it's a community-driven financial institution, bank or credit union, I not just expect them not to use my data in nefarious ways. I would be absolutely shocked if they did.
Yeah, I mean, this is a big one. The idea really is that, how do we look at protecting the consumer in a way that enhances their ability to borrow money in a more appropriate, responsible way, and that's where I share significant interest in this report. Right, I really dive into the data harvesting side. I'm curious to see where this goes. Yeah, I hope that that we continue to move in a direction of oversight. Again, it's long overdue.
Yeah, absolutely. The third component that the CFPB does talk about is overextending and loan stacking, specifically on buy now, pay later. Doug, I'd love to hear your thoughts and your lens on how we interpreted the report.
Yeah, I mean, there are many reasons for overextension, right? It all starts with a product design lens. When workflows become streamlined and payments automated, things happen faster. This is a digital age, right? But without the checks and balances intentionally built in, small frictions become large systematic problems. Today, the BNPL marketplace makes it easy to take on a loan. Without that sort of transparency into a consumer's spending habits or lending or borrowing habits, it's difficult to make the argument that you're looking out for consumers' best interest, right? Again, going back to the financial institution side, a bank, a credit union is not going to lend or extend BNPL where it's not appropriate. And that's a really good point and a market differentiator when we go back to the idea of overextension. We aren't going to get ourselves into a pickle, if you will, whereby when we're looking at fintech, potentially you might, right, unintentionally have taken out a loan, what we would call an installment plan technically, right, from an Amazon or potentially from your airline, where they're offered by different fintech providers, and yet neither one of those understands that you just took out a potential installment plan on the other, right? That could be 2, 3, 4, 5, 6 deep, and could potentially get us, put us in a pickle, right? And to many of the points that have been made here today, we would love to see BNPL be a healthy, ubiquitous payment opportunity for consumers for decades to come. We want to do it in a responsible manner, and we're here to take guidance, learn from what's happening in the market space, and build a product that delivers on that in a way that's fantastic.
Yeah, absolutely. So regulatory landscape looking ahead, Director Chopra has released remarks on next steps for the CFPB based on this report. So for everybody listening from financial institutions, here's really what you need to know. Consumer financial health regulations are coming. Director Chopra has asked the CFPB staff to look at the baseline protections that Congress has already established for credit cards to identify potential guidance or rules for BNPL. The second is consumer data protection is coming. Now, this actually has nothing to do with buy now, pay later specifically. This is just consumer data protection as a whole. We've seen other entire continents get into this. We've seen a few states get into this. So the third component Director Chopra had brought up was consumer reporting practices may change. Now, this goes to what you were saying, Doug, earlier about buy now, pay later adoption leading to a disproportionate amount of small installment loans. And the CFPB will provide guidance on how to report on and how to use this. The fourth point that the CFPB said that they are looking into is the supervision and oversight that is coming. Director Chopra once again did refer to the credit card companies as an example of how these examinations will take place. It's important to point out they're talking about these types of examinations specifically for the big five. So this would be the first time Affirm and Klarna and Afterpay, these third-party fintechs, are actually examined by the CFPB in how they interact with consumer data and make these lending decisions. The fifth is they're also looking at a new way to understand household debt burden. This definitely gets the lending geek in me pretty excited. But whether it's termed credit worthiness or ability to repay, the CFPB is looking at an industry level shift and how that's calculated and understood.
Yeah, to switch gears a little bit, Bryce, and talk about some of the more fun things that came from the report, right? What are some of the facts, right? Like, what is BNPL? Many people are still trying to get up to speed with that. So, looking at the report, what they found was that the vast majority of the payments for loans come from debit cards, right? 89% in 2021. That stat is virtually unchanged from the prior 2 years, despite the rapid increase in adoption. I'd love to hear your perspective on that a bit, and I'm sure our listeners would as well.
Yeah, so this stat was probably the most validated thing I personally have ever had coming from the CFPB. When we were building Equipify, obviously we were looking at, should we do this on debit card? Should we do this on credit card? Really, what you boil it down to is the consumer that calls us home for banking, who likes using Affirm, Klarna, Afterpay, or PayPal for buy now, pay later. Which card product do they use from my institution 26, 30 times a month? And the CFPB affirmed over the last 3 years, it's almost 90% debit card power users are the ones who are actually using buy now, pay later from third-party fintechs today. I think this is a massive opportunity and also just some reassurance on which card product is going to have the highest engagement, usage, and really cardholder or customer satisfaction as a way to level up one of our existing card products as an institution. It's almost like a once in a lifetime to really level up a huge card product within your portfolio.
Well, I'd love to hear that perspective from you, and thanks for sharing some of those additional details. I truly believe that the debit side of the house, if you will, has a bigger value add from a BNPL perspective. And some of my prior work, we did a lot of homework on really what credit is, right? What a credit version of the product of BNPL might look like. And, it's traditionally more of like a balance transfer, right? You're not really creating these sort of signature loans or these installment plans in the same manner that you would on the debit side. You can imagine a consumer cardholder making a purchase today on their debit card and it being something substantial, right? Maybe $1,000 television, right? And tomorrow, some real use case comes up where they need that money today, right? They need that money for a medical expense or something really important for a day-to-day, right? And the ability for the post-purchase side of the house to convert that debit purchase into an installment plan may be crucial for them. And these are the points I made earlier in the webinar about massive purpose, right? I believe a credit version of a solution, BNPL solution, while beneficial in some cases, I believe there's less impact would be less adoption. We will find out more in the future, but I believe the report validates most of what our BNPL model is to provide, right? And that is a debit solution for banks, and that's where we're headed, full steam ahead. And I believe will be the most beneficial for consumer cardholders today.
Absolutely. And the second fun thing the CFPB pulled out, which I think is kind of in line with that, is buy now, pay later is consistently being used for a diverse range of products. And now the CFPB acknowledges that this is being used for everyday purchases. And from a lender's perspective, what I have heard is, well, that's kind of scary, right? Somebody goes into a Costco and they want to, buy a few $100s worth of items. Should they really be able to borrow money for that specific purchase? And when you take a step back and say, well, what do they do with your credit card? They go into Costco and they borrow money for that specific purchase. So I think it's really cool to see the CFPB acknowledging that buy now, pay later is just a new form of credit. It's a new wave of credit. And it's no longer just that, Sephora purchase or Peloton. It's actually being used for everyday purchases.
So the CFPB's recognition of and a call out to 2019's everyday purchases increasing by 1,207% is phenomenal, right? And not to overshadow 2020 with roughly 430% increase. That further validates BNPL for us and how we're going to position this for consumer cardholders through financial institutions. And really welcome that call out. Gen Z, millennials are using BNPL in ways that are unique and probably different than we originally anticipated. And everyday purchases, again, further validates BNPL as a necessity in the marketplace. Equipify is driving towards that and intends to deliver that through the financial institution onto the consumer cardholder. And we believe we're doing that in a way that will meet the consumer at the edge.
Absolutely. So speaking of millennial and Gen Z, the third thing we wanted to point out from the report was actually the breakdown of usage by the age demographic.
A good point here to note is where is the lion's share of BNPL being used by what generation? And it is the millennials. So I just wanted to point that out.
Yeah, if you put your financial institution like digital and payments hat on, a couple of years ago, everyone's like, oh, we need to update our mobile tech stack because we know that that's where our consumers are going. Oh, we need to update our bill pay or P2P or digital issuance tech stacks because we know that that's where consumers are going. This report shows where are people going for their payment preferences and their trends, right? How do we attract, retain, and grow the next generations of consumers and how they want to interact with their money? It's right there in front of you. It's fascinating, and it's a great, honestly, product strategy roadmap that even the CFPB is calling out and saying, hey, this is how consumers are interacting with their money. This is the payment preferences that they have. They're using it for these types of purchases, and they want it from their primary FI. So I'm not trying to sell too hard, but I do want to get into some of the main takeaways we have from this entire report. So there's three main takeaways. The first, regulation's good, needed, and overdue. The second, the current solutions today put borrowers at risk of further distress. We've talked about this at length during this conversation today, Doug, but third-party fintechs don't have full visibility into consumers' financial health and their direct deposits and their cash flow from their primary financial institution. And we want to make sure that the CFPB has oversight and can help provide some assurance and risk protection for consumers. And the third, there's need for consolidation and transparency. Doug brought up a really good point earlier that if I like buy now, pay later as my payment preference, if I shop at 20 different merchants online and in store, I may end up with 5 or 6 different relationships. to us, there's really only one company within that consumer's life that is best positioned to consolidate that. And it's the primary financial institution.
Yeah, Bryce, that's exactly right.
Awesome. Well, hey, Doug, I really appreciate your time today, jumping on to this webinar and conversation with me.
Yeah, it's been enlightening and really, really excited to be part of the BNPL landscape. So thanks for having me. To all those that listened in, if you have any questions, would like to dive into what BNPL looks like for a financial institution, we would be delighted to bring you up to speed. So please feel free to reach out to anybody at the Equipify team, including myself, here to answer any questions you might all have.
Awesome. Thanks, Doug. Appreciate it.
Thank you very much.